All right. Good morning. Good morning, ladies and gentlemen. Okay. We're about to begin. All right. Good morning. Good morning, ladies and gentlemen. Good afternoon and good evening. If I told you in the evening hours of the day, I'm Coach Musa, and it's Friday. And for all the Muslim brothers and sisters, I want to wish you a happy Friday, Juma Mubarak. And yes, and as usual, every Friday we have a question and answer session that is most of the time hosted by me, but you'd as well excuse me and forgive me for missing out on some of the Fridays. Yeah, due to some other busy schedules, I'm always tight, and I'm unable to take you through the sessions. But I'm glad that today I am fully here, and I trust all that will be in position to attend this training to the very end. Today's session will be one of the most amazing sessions. It may be quite unique and different from the other question and answer sessions we've had before. Yeah, so just the mic check. I hope, let me just get a feedback if my audio is really well, is okay. If everyone is able to hear me very well. Let me just get a little feedback, probably. So that at least we can get started when everyone is on board and is able to hear whatever I'm going to share today. So a little bit of a feedback, please. Yes, Coach Julius, are you getting me loud and clear? Yes. Coach Mopiwa, can you hear me loud and clear, please? Let me just get a little bit of feedback so that we can get started.
Yes, Coach Musa, you're loud and clear.
Thank you very much. Thank you very much.
We can hear you very well.
Okay. All right. Just a quick reminder. We've always, for those who are joining us for the very first time, we have always a very tight week schedule in regards to the daily trainings. with respect to crypto trading and having a better understanding of how the robot works, and then also understanding the other benefits, those other extra ways in which one can maximize while using the robot besides the trade profit. And I'm talking about the compensation plan. So we always have a very tight week day from Monday to Saturday. And just a quick one, if you're joining us for the very first time, on Mondays, we tend to have the Royalq bot fundamentals. And that is when you get to know a little bit on how the bot operates generally. And then on Tuesdays, we tend to have what we call the compensation plan details. Of course, this is where now the other bit of understanding how to maximize from the bot comes in. Yeah. So normally, I think we tend to have a number of people who shares with us on those days. So that is when you really get to understand more regarding to how you can make those extra repeated daily income passively when you join the Royalq community. So we tend to have also some bit of a trading view and passive trading. Of course, this is where we talk about the trading view. This is where you get introduced into how you can use the trading view to analyze and be able to pick a coin by yourself without entirely depending on any signal or without having to wait for any signal. That is actually going to be put in the groups, because that is the fundamentals of you being part of this amazing community. As crypto ambassadors, normally what we do is that we have tried so much to generate and develop a system where we believe after you understanding the concepts and the generic skills that someone wants or requires to, to traverse the crypto space, you are able to up your own group and then help them grow up. Yeah, you help them, mentor them, and see them through just the same way you are, they helped you out to get to where you are. So that is a system which is already inbuilt, and under the umbrellas of Galaxy, of Crypto Ambassador is where you have the Galaxy Crypto Academy, which is one of the groups also that is run by me, but all courtesy of Crypto Ambassadors. Yeah, because my mentor and my upline is called Julius, who is a very amazing leader there. So on Friday, on Thursday, yeah, we get to marketing as okay, the marketing industry, what we call the affiliate marketing industry, is one of the most paying industries so far we have. And not very many people know how to traverse it successfully. Yeah. And because of that, as a team, we tend to share more on Thursdays on those basic tips that someone can get started with as he or she traverses this financial industry, the affiliate marketing. Yeah, so this is where we tend to share and some of the tips in which how one can prospect, how someone can add to the list that he or she has in terms of prospects, and then share the opportunity, and successfully the people he or she shares with joins the team, and then they win together. So basically that is done normally Thursdays. And if you want to be part of Thursday sessions, I think you can also benefit a lot from. You can always catch up every Thursday and be part of that. It is always in the morning. Then on Fridays is when we have the question and answer sessions, where basically we tend to crown up the week with the sharing openly with the leaders on board and our ideas in regard to how best we understood the business that were shared to us or that were told to us in the course of the week. Or if you could be having some questions somewhere, this is where also you get a chance to openly ask, and that you are actually made to understand better. Now, today's Friday session is going to be a little bit different because, just like I said from the beginning, as a team that has tried to develop a system, we believe that we are already in this financial market. We are already into this business, the crypto space business, and we wouldn't wish to take any chance. The things we didn't know, this is the best opportunity of you knowing it better. Trust me, previously, before venturing into the crypto space, I believe, and for people who are probably joining the crypto space for all the financial market in regards to trading for the very first time, some of us who traded Forex back then, we before we joined the trading, we used to see the charts and really did not make sense to us at all. In fact, personally, it used not to make any sense to me. I would just see things, red and green, and it really made no sense even when I would see news, when they're giving those updates. But trust me, when I took interest and I said, no, I think it's high time to really know and understand what this is all about. And I am blessed that I took that chance. Yeah. So it is the same thing here. The financial market that most of you have joined. Just a minute, guys. Oh, yeah. Yes. Sorry, guys. All right. So that is the financial market we've joined. So as I said earlier on, it didn't really make sense to us when we look at the chart, and it almost looked like a dream. Yeah. But here we are already. We're already in a financial system, and we're using tools that are used to analyze the financial market. Talk about cryptocurrency, talk about Forex trading, stocks, any financial system, any financial market. We are now here using some of the tools that were used by people who were involved in such businesses before, some of us. Yeah. So today's session basically is going to be, we're going to look at the fundamentals of trading on the financial market. Yeah, we're going to look at the fundamentals of trading in the financial markets. Now, when I talk about the fundamentals of trading in the financial market, we're going to look at basically of four things. One, we're going to look at how important it is to understand the market of the financial industry you're in currently, of course, which is the crypto trading business. And we're going to look at also the wallet management bit. After understanding your financial market, it is very important to know wallet management. And then basically at the end of it all, we shall look at how and when to be in the market and when not to be in the market. Now, ladies and gentlemen, today probably I will only handle the first part, yeah, of the fundamentals of trading in the financial market. I'm going to look at I'm going to look at basically understanding the industry, the financial market. And when, of course, I'm going to share something here. Let me just try to clear my chat before I can share. Just give me this. Let me try to share this. Let me just try to clear this first. Okay. Let me just look for another. Okay, I can't just. All right, ladies and gentlemen, if you look at this, the chart before us, Trust me, many would. Just a minute, let me try to clear whatever lines that we have here. So that we have, just a minute. Let's try to. Okay. Hey, I got my element. Okay. All right. So allow me now share my screen. Sorry for the delay, but I believe you shall appreciate it afterwards. I was trying to clear my chat. Now I believe all of us are seeing the chat. I believe all of us are able to see this chat. So ladies and gentlemen, honestly speaking, when someone opens for you a chat like this, when you haven't taken any initiative of joining the, the trading world, it may be very hard and difficult for you to really interpret and understand what it all means. Yeah, it completely will make no sense at all, because it looks like just a bunch of doodling, somebody keep just drawing things anyhow in the book, and it makes no sense. Yeah, but once you get to understand and appreciate how the chart is looking like, then you move your trading to the next level. And what I'm going to do is this. Before, I know we have done a lot of trading, technical analysis training, yeah, with the leader Julius. And through those different trainings, we were introduced to indicators, we were introduced to trend lines, yeah, that helps you to monitor, the market. However, before you go into even using the indicators, before you're introducing the trend lines, it's very important and key that you first of all know how to interpret the market from the basic point of view using just the candle. By just mere looking at the candle, you should be in position to actually to interpret the market. If you look at a candle like this, are you able to understand? Are you able to interpret the market just using a candle like this? Because honestly speaking, from all the candles we are seeing, displayed on the chart, all these ones here, these candles we are trying to see built up are representing a trading session. They are representing a trading session. And each of these candles gives us 4 basic information, which are very important. And once you understand them, then you're good to go. These candles we're seeing, if you're able to interpret, then interpreting the chart becomes very, very easy for you, even without introducing any indicator, even without introducing any element of the trend line. You're able to understand. Look at the chart and say, yeah, this is a good market. Just by me looking at the chart, you're able to tell, okay, this is a good market. Yeah? This is a very, very good market. Even before you've done anything to confirm what your thoughts are telling you, what you have in the mind. Okay, so I'm just gonna take us through this a little on how you can use this to help you understand the bigger picture of the chart. Now, ladies and gentlemen, each of the candles we see on the chart represents a trading session. That is 1. 2, it represents the behaviors of the people involved in that particular trading session. 3, it gives an information of the opening price at which the trading session started at. 4, it shows you the closing price within the trading session. And 5, it shows you the strength of the market. It shows you the strength of the traders involved in that particular trading session. 5 key information that you can get from a candle like this. 1, it shows you the opening price. 2, it shows you the closing price. 3, it shows you the strength of the market. 4, it shows you the behavior of the traders within the market. And 5, it generally gives you, it represents a trading session. Now, those trading sessions are categorized into the time frames we always talk about. We have the 1 hour time frame, the 30 minutes time frame. We have the 1 day, the weekly. All those you see. If you check on your candle, like here, the time frame I'm currently using is the 1 hour. Is here. Is the 1 hour time frame. So meaning what every candle I'm seeing here, it took it 1 hour for it to be fully formed. Every candle I'm seeing here is representing a trading session, a 1 hour trading session, within which there were buyers and sellers. But irrespective, depending on the strength of which group of traders were dominant in that trading session, the color of the candle is then displayed accordingly. Each of the candles we see on the chart represents a trading session. And in each of those trading sessions, we have traders, buyers, and sellers doing the transaction. But depending on which group of people were more in that particular trading session, we are able to see the end results in terms of the color of the candle. Are we following? Are we together? Is it making sense? I guess so. Now, with that at the back of your mind, if you look at a candle like this, a candle has basically 4 parts. A candle has this part, it has this part, this other part connecting this thread-like structure to this other big body-like structure, and then it has this other upper part, and then it has this other end. All right. Now, depending on the color of the candle, or depending on the group of traders who were dominant in that particular trading session, a color of the candle is going to be displayed. If in a given trading session, the group of traders who were dominant in that session were the buyers, the end result will be a green color. Now, why a green color? Because this is the green and the red colors are the commonest colors that at least people begin building up from. Then after now understanding the concept of the green and the red color, you can now decide to design the colors depending on your interest actually. But for general consumption and better understanding, we know that the green color represents the buyers in the market, the red color represents the sellers in the market, which in literal term, the trading terms, the green candle represents the bull, and then the red candle represents the bears. That is the general colors we know to help us build and understand better the market. Now, if you see a color of the candle is green, it means yes, within the trading session, there were both buyers and sellers. However, by the time the trading session was ending, or in the course of the trading session, the number of the buyers were more compared to the number of the sellers. Therefore, the end result is a green color. If you see a red color or a red candle, it means yes, within that trading session, they were both the sellers and the buyers. But in the entire trading session, the people who were dominant until the trading session ended are the sellers. And because of that, we have 2 things. The green candle and the red candle both have 4 parts. And I'm going to explain. The green candle has this lower part, which is the same as the red candle. It has this upper part, which is the same as the red candle. It has this other part connecting this thread-like structure to the body, to this other green body, and this other lower part connecting the wick to the body. Now, for a green candle, simply, just a minute. This part, let me just do this, just a minute. Okay. Just a minute. All right. So now these parts are named in this manner. All right. I hope you're all seeing this. Now for a green candle, generally this part here, the thick part, the thicker part on both candles are called the body. These are called the body. Then this thread-like structure which protrudes from the body are what we call the shadows. They are called the shadows. Yeah, shadows. Or you can simply call them wicks. Wicks or shadows. Just, you know, like in a candle, that thread-like structure that traverses inside the body of the candle. This, I mean, the normal candle we light. That is the wick. So it is the same concept here because the candlestick was developed from the concept of a candle. Now, sorry. So for this part here is called the body for both candles. And then for a green candle, the lower part of the body, or this other part that connects the body to the wick, to the lower wick, is called the open. This other part that connects the upper shadow or the upper wick to the body is called the close. That is for a green candle. For a red candle, this other lower part that connects the body to the lower wick is called the close, and the upper part that connects the body to the upper wick is called the open. Now I'm going to break it down further. On this candle, on the green candle, let's begin from the green candle. The open, which we have just named, represents one, the opening session in this trading session, represented by the candle. The open means that is the opening of the trading session represented by this candle. 2, it also represents the opening price at which this particular trading session started at or started with. Because when you draw, as we shall check on later on, that when you bring your horizontal line, yeah, and try to connect to the open of this candle, that horizontal line will run onto the price lane and it will touch that particular price, representing the opening price at which this trading session started at. Yeah, we shall demonstrate that. So that is basically what this means, right? So this, the open represents the opening session of this trading session. It also represents the opening price. The close represents the closing session of that trading session. It also represents the closing price. Same way, if you try to extrapolate the line onto the price plane, it will exactly go and touch on, or it will highlight the price at which this trading session closed at. So the close represents the closing session or the closing price in that particular trading session. Now, the high and the low, first of all, this wicks here represents price fluctuations within the trading session. It shows you how prices has been playing about, yeah? How the prices has been playing around or about within that particular trading session. So this wicks here represents the fluctuations in prices. That's why you were able to see that the trading session closed here, it opened here. But we have this extension up to here, of which end it is labeled as low. Same way, much as it closed at this point, we're having this extension whose end is labeled as high. And that is what we're interested in knowing what that means. Now, since it represents price fluctuation, this is generally what it means. That the high represents the highest price registered within that particular trading session. The highest price reached during that trading session. This is represented by the high, which is the end of the upper wick or the upper shadow. The low represents the lowest price registered during that trading session. That's why it is labeled as the low. So you have a high, which is the highest price registered within the trading session, the low, which is the lowest price registered within the trading session, and then we have the opening price or the opening session, and then the closing price or the closing session. That is for the green candle. Now, what does that mean? It means that much as the session may open, because trading is a continuous process, is a continuous business. People buy and sell, buy and sell. As for you, you're sleeping, probably somebody's waking up in some other part of the world and is entering the market. Now, somebody who probably might have joined maybe from some other country somewhere here, I mean, in this other previous trading session, is looking at an opportunity of selling. You get that? So what this means definitely is that when the trading session opens, don't expect the price to completely shoot up. Expect fluctuations as we are going to be seeing, as we are seeing represented by these weeks. Expect a fluctuation because there is buying, there is selling, there is buying, there is selling. Now, the concept of supply and demand gives a better understanding of interpreting this candle. You know it very well that, take it for instance, you have something too much in the market. When something is more or is too much in the market, there's a tendency that the price of that particular item drops, right? Now, when the price of that particular item drops or is low, it presents a buying opportunity to someone who is looking far, who has vision, who is looking at the future. That, you know, I must buy when the price is low because definitely, and most certainly, this price would go up. And when it goes up, I'll be in position to sell and I will make profit. Now, that is the mindset that every trader has. You're looking at an opportunity of buying when the price of that particular item is down, and then look for a selling opportunity when the price rises by some percentage. So with that in the back of your mind, you know that once something reduces out of circulation or from the circulation, what happens? It becomes less in the market. Therefore, the many people will be fighting for the little in the market. What will happen then? The price will be forced to move up. It will be forced to shoot. Yeah. And once the price shoots, the more people are buying in the name of stocking, literally, they're not knowing they're pushing the price up, right? They'll be pushing the price up. And depending on the percentages of take profit that someone wants, people will be exiting slowly but slowly, one at a time, right? So these fluctuations represent some of those behaviors in the market. These shadows here, these shadows we're talking about represents the behavior of traders in a given trading session. Those who are buying, those who are selling, those who are looking for a buying, like that. Now, this is the interpretation of this candle. It means that the trading session opened, right? After the trading session opened, there are people, right? Of course, this is the end results of the candle. But remember, they will be buying and selling. So you'll see the body of the candle moving about up and down, moving up and down. Yeah, but keeping on building as well. It will be building up, but moving up and down. It moves up, comes down. You know, it increases in size, reduces in size. Now, the entire trading session ending like this, and then you having a candle that is represented like this, well, means minute.
All right. Okay. Sorry for that, but we believe Our presenter is coming back. He's coming back in just a few minutes. There's a few background here and there, but he's doing his best to make sure that according to his location, so that you could have a better hearsay. So nothing to worry. Just be a little bit patient. All right. Sorry for that, ladies and gentlemen. Coach Musa, can we be able to hear you once again?
Yeah, I'm on, I mean, yeah, for your information, am I okay? Is the audio okay? Is it okay now?
It's okay, but there has been a consistent feedback. I don't know if it's a TV or something. Maybe you could reduce on the background a little bit.
All right, just a minute. Let me.
Sure.
I'm in a place with. I'm trying to just find a better background. Yes.
Right.
All right, is my background fair now?
Beautiful. Fair? Beautiful, right. Beautiful.
Okay, thank you. Okay. Perfect. I think here is better. Yeah. Here is better. I think we can now continue. Okay, sorry guys. I'm in some village, so the area I was in has a poor network and with some funny background. All right, so we can proceed. Share my screen again. Okay, so I believe, are we still okay from the part we started from? Are we okay? Are we trying to follow?
Sure.
Trying to follow, maybe just some feedback. Okay, thank you. All right. Now, having gone through the green candle, so we're trying to interpret this candle that with everything that happens within a trading session, we are able to interpret a given candle once it closes, and that is what gives us the decisive idea of knowing what to do next in the next trading session when it is about to start or when it is going to start. Now, just like I said before, that if you want to understand and try to interpret how this candle is trying to, or they want to get information from this candle, it means that with this trading session opened here, and because of the behavior of the traders in the market, somehow the sellers, the people who joined this trading session, the people who joined the trading session, let's say joined from the previous trading session and are looking out for a sell opportunity, are looking out for a sell opportunity or opportunity of exiting the market, are the people whom you see their behavior causing this effect here, the drop in the price. Because remember, this, as I said, represents the opening session, and at the same time, it also represents the opening price. Yeah. So at this price, probably there are people who are looking for an opportunity of exiting the market. Maybe because probably they joined somewhere in the previous, in the previous trading session somewhere. Now this was a good move for them, and now it is high time for them to do what? To exit the market. All right. So exiting the market means selling, and selling means they are taking back whatever they had bought from the market back to the market. Yeah, they're taking back what they had stored previously after buying back to the market, and it is causing an effect in the price. Causing the effect in the price in the sense that the market, the price was able to drop down. The massive sell resulted into a drop completely in the price. And the drop in the price, of course, you see, it caused the price to drop as low as this point. But with the same mindset of traders in the market, any opportunity of a drop in the price is a very good buy opportunity. Very many people will be eyeing for such an opportunity. They're just waiting for any slight decrease in the price and they will enter. Now, because of that, look at what happened then. The buyers started entering the market from here, driving the market or the price of this item completely up back to where the opening price, as if it was not enough. In fact, they were hungry. People bought more, and because of buying more, the price continued past the opening price, went up, and so far, this is the price was pushed by the buyers because of the continuous buying. Yeah. Now, because of that, what happened then? This movement right away from here, if we're taking in terms of percentage, this movement right from here all the way to here is a very good percentage, by the way. All the way to here is a very good percentage. What happens then? People like me will begin exiting the market now. Now, if you're trading with the robot will begin exiting the market automatically, depending on the take profit percentage you've set. Now, that massive exiting of the market also will have effect in the price of that particular item or that particular coin you're trading. And what happens? The price again will begin doing what? Dropping, because we're taking back whatever we had stocked back in circulation. Now, the price will begin dropping. And by the time that this trading session is ending, the price the session did close at that highest price, but rather the session ended and this was the price at which that trading session ended. That's why it is called the close or the closing price. Right? Is that part clear? Is it understood? All right. Is it if you're trying to follow? Yeah, let's try to share. Let's try to share some feedback. Let's try to share some love hearts. Yeah, so that we continue to the next. Because I'm just giving you this concept so that I'm going to interpret it when we now go on the chat. Trust me, you're gonna like that. Yeah. So if you're still following, can I have some love hearts, guys? Yeah. Because this is the basic. This is what you just have to do. This is just what you need to know. If you can be in position to understand and interpret the market just by looking at a single candle, hey, what will happen? Because I remember I told you that this candle will represent the behavior of the traders in the market. It will show you the strength of that market. Yeah, that's why you see the different types of candles setting in. There are candles with small body, there are candles with very long lower shadow, the candle is very long upper shadow. Why? They're trying to communicate something to you. They're trying to signal something that, you know what, if this market, if this market was going up and finally you begin seeing maybe a candle that has been formed with a very small body, but with a very long upper shadow, what is it trying to mean? It means that yes, the buyers were prominent and serious in the market, but at the end of it all, they were overwhelmed by the sellers. There was massive selling. And as a result, the price had to move from all that far back, almost to where it started. But of course, it was, the people were lucky that it didn't go back to the opening price, but the sellers were serious. There was massive selling. Yeah. So this candles gives you a lot of information. I was giving an example of if you find a candle which is like this. I will not talk about its length for now because that's not what we're looking at. With a short lower shadow, but very long upper shadow. What does it mean? If it is the green candle, it will mean that if this is the open, because if it is a green candle, this must be the open, and then this must be the close. Yeah, this must be the close. So what literally it will mean is that when the trading session opened here, right, some selling happened, resulting into the price dropping to this point. But then the buyers came in the market, dominated the market, and pushed the price up to around there. But at the end of it all, a lot of selling pressure came in. People had to do a lot of massive sell. The massive sell resulted into the price dropping from the high completely back near where it almost opened, but it was lucky that it did not come to the opening price, but it rather closed here. So resulting into the body of the candle being very small. Now, what does this trading session tells you of the next trading session going to be like? It communicates something. It tries to tell you and inform you that, you know what, watch out, be careful. There is some massive selling happening. So if you enter anyhow, expect boom, downward movement. Because people are still selling, but just that trading session, if it was 1 hour, that means that 1 hour ended when people are selling. So the selling will continue in the next hour if you're using the 1 hour as your trading session or time frame. You know that. So all this communicates something. If you can understand this when the people are going to talk about the different types of candles, trust me, you grasp it on spot. You will just grasp it there and then because you would have understood the market. Yeah. If you find a candle that looks like this, for example, sorry for my drawing, because of relocating my position, I'm trying to trust gamble, on this. Okay. With a very long lower shadow, but very short upper shadow. What does this try to show you? It means that, yes, if it is a green candle, okay, I'm talking is just different to green candle first. If it was a green candle, this of course will be the open, yeah, and this will be the close. Now, what this one entails, what this one means is that when this trading session opened, yeah, there was massive selling. And that massive selling resulted into the price dropping tremendously. But when the trading session opened, as the trading session was continuing, the low price was presenting a very good buy opportunity to the buyers. Because this was, it is really very low. Yeah, you know what, let's enter, let's go. Now, there was a lot of massive buying. The massive buying resulted into the price moving from here back past the opening price to this far. You get that? Here. Then by the time the trading session was ending, it came and ended here. Now, if that was a green candle, it is trying to communicate something. It means that yes, still that power of buying may continue in the next trading session because there was a very little fluctuation in terms of selling, but there were more of the buying as it is portrayed, portrayed by this long lower shadow. Because if the buyers had the power to push the price right away from down here up to this far, what is it telling you? That means the next session probably is another buy opportunity. You can still join. All right. Hope that is clear. So that we are done with the green candle. Ladies and gentlemen, yes. Yes. Yes, today is a different version, yeah. So probably I'll give you an opportunity just to ask a few questions afterwards. That is afterwards, yeah. So we are proceeding to somebody's saying, can you repeat, sir? Yeah, okay. Because these candles, which I've just explained, you see, now that is when now you now know if this type of candle is formed, if the market was moving down and I see this candle, oh, what do I do? You know what to do. If it was the market was trending upward and then you see that particular candle, probably with a small body, all these candles here we are talking about, right? All the candles we are talking about it is self-explanatory once you understand the concept of interpreting and understanding a trading session, which is represented by a candle, depending on the time frame you actually use for analyzing the market. Right? Okay. Well, that is very clear. Do we proceed? I hope, okay, my screen, okay, hope my screen is visible. Are we seeing my screen? Let's proceed. We are going to the red candle. The red candle. Just a minute. Okay. So let's go to the green candle. I mean the red candle. Let's try to understand the red candle. Let's just try to interpret the red candle. Now, just like we said earlier on, that the red candle we see represents the sellers, represents the selling power of traders in the market. It represents the bears. Now, what it literally represents is that if you see a candle is red in color, just know it is representing a trading session, but a trading session which is dominated by selling activities. Right? If you see a red candle, it is representing a trading session depending on the time frame. If you're using 1 hour, it means that red candle is representing a 1 hour trading session, which was dominated by the sellers. The buyers were there, but there was little of buying. More was selling. Right? That is what you need to know. And then two, the explanation seems similar, but slightly different. That much as the red candle also has those 4 parts, the highest price registered in the trading session, the lowest price registered in the trading session, and then the close and the open. We should be in position to notice that. We should be in position to notice that the red candle has an opening from the top and then the close from the bottom. Now, I'm going to explain this with reference to this green candle. Let's assume that in this trading session, these were the candles that were following each other. We have a trading session that started right here. Now, what happened? It opened from here, it dropped to this low. The buyers pushed the price further through their buying activity. Up to there, the sellers came on board. The selling activity started from there, and by the time the trading session was ending, this is where it closed. This was the closing price. Now, the closing price, in most cases, the closing price of a previous trading session becomes the opening price of the next trading session. Do I make sense there? The closing in most cases, mark that word, the closing price in the previous trading session becomes the opening price in the next trading session. Yeah. Let's try to check that. Before I don't want it to first come here, but let's just try to check it out. Let's try to check it out here. Is this okay? Okay. You see this? Just going to explain this with reference to this. Let me give you a simple example of this. Are we all seeing this? Let me just increase the size again. Let's increase the size again to make it bigger so that we can understand better. Okay. Okay. Let me just concentrate here a little, just to give you an understanding of my statement. I want to substantiate my statement, which I just said with regard to that. Let's look at this candle, this area here. We shall notice that in the trading session represented by this candle, where the candle closed at became the opening price in this other candle, this other long candle. I don't know whether we're seeing that. Yeah, are we trying to see this area? That's where this green candle closed at is where this other long green candle opened at. That's why I was saying, in most cases, the closing price of the previous candles becomes the closing price of the previous candle becomes the opening price of the next candle. Or the closing price in the previous trading session becomes the opening price in the next trading session. That's what I was meaning. Let's go back to that candle. Let's go back to the candle, then we finally come here and try to demonstrate something. Now, this is it. Now, this is what it means. It means that when you want to interpret this, the selling activities of traders in the market, this is what it means. It means that when the trading session opens, yeah, of course, fluctuations in the market, the buyers will try to push the price further. They will continue buying just in an attempt to push the price further. Now, to somebody who had entered previously and this push was sufficient enough, will begin exiting the market after the price reaching this high. The person will begin exiting the market. Now, the effect of exiting the market will result into the price again dropping back to the opening price. As if it is not enough, because the trading session is continuing, the selling activity continues all the way. And that selling effect results into the price dropping to this low. But because it is a trading activity between buyers and sellers, still buyers look at this as an entry opportunity. Yeah? This is the buying opportunity because the price has dropped. They begin picking up from here. They begin buying as the price is being pushed back up. But unfortunately, the trading session ends. And this is the buyers would have pushed the price. See this? And that is where it is going to close. Now, in a scenario where we have the closing price below the opening price, you will see the candle will be red in color. It will represent a dominance of a selling activity that happened. Because now, imagine, this was the opening price, but the trading session ended when you were in the negative. If it were a business, you would be in a loss. Or like for our case, who trades with the robot, this will be floating loss. Yeah, this is floating loss because the price of your asset is way below the price you bought, isn't it? So what do you need to do? You now then need to be a little patient, because obviously you're not alone. People are trading. Some people are looking at this close as a good entry opportunity because it is still lower. You who entered at this point have to be a little patient because yours is way below. But somebody who had not yet entered the market, this price is low. Definitely. This person may bail you out, or these traders will bail you out. The schools of traders who are entering at this point will bail you out because they will buy and push the market, the price up. Maybe probably back to the opening price or to coincide with your opening. The price at which you bought yours, you're now above, the price is now above the price at which you bought. Then you begin smiling, yeah? So trading is all about executing patience. And once you understand this concept, you don't cry, you will not complain. because you are not alone. The market is never your friend, but you have traders who will be your friend. They will always help you push the market up. Once you've done your activity, relax. Wait. If you cannot wait, buy more. Try to reduce the circulation, the supply in the market. Buy more. Because indirectly, you buying more. What are you doing? Indirectly, you're also helping to boost it up. That's when you realize that, yes, that's why when they're explaining that concept of buying more, reducing the average price closer or bringing it closer to the current price, what is it trying to mean? That means you're not going to take long, yeah? Because you've done something. You've tried to move the market a little. So if the market, if the other trader also helps you out by buying more, what happens? The price moves up. Yeah. And you'll be smiling after the robot closing the trades in profit. All right. Is that concept understood very well? If it is understood, yes. Give me some love hearts, some thumbs up, and then we go to the chart now. Now go to the chart. There's one more thing I want to share: the trend lines. In relation to this, I want us to see something briefly on the candles and their patterns and behaviors in the market, and then we introduce how we can now monitor this market, which is represented by a trading session, which is the candle. How can we now monitor and tell that, okay, this is now where the market is most likely to go? Because you cannot base on one candle, right? Yeah, you must base in a number of things. So, and the trend lines is paramount. Yes, you would have understood how to interpret the market based on the behavior of the candle and the color and the size. But then, one more thing. It should be important to see the trend, understand the trend, interpret it well and understand it. Then it will be important to execute the trades appropriately. Is it clear? Is it clear?
Sure. Go on, sir.
Yeah.
Good. Very clear, my leader.
All right. So that is the bit. So having gone through that, we're now going to go back to our chart now. I believe you can now look at the chart. You will be impressed. What we're only trying to do here is give you the basics of understanding and interpreting the market without stressing, without first of all saying, now this indicator, how do I adjust it? How do I set it? The basic first, the basic. Yes, we started up, but now we are slowly going back to the basic. Something that gives you better understanding. Now, when the indicator is coming in, it is now just helping you to confirm. It is helping you to make the work easier. Yeah, it is trying you're trying to look at a scenario where whether what you're thinking or what your interpretation is like is being in line with what the indicator is going to show you or is going to bring. Yeah, that is just that. And once that happens, you're good. You now say, yes, I was right. I was absolutely right on that. So it gives you the confidence and the energy to trade more and yeah. All right. So let's go to the chart. Let's go to the chart now. Have you understood? Okay. There we are. Are we able to see the chart? Okay. Now, can we now see the candles? Can we now see the power of buyers and sellers in every trading session represented by the candles we see here? This is the 1 hour time frame. This is each of these candles we're seeing displayed took 1 hour for it to be fully formed. Meaning definitely the candle you're seeing here is representing a trading session which is dominated by a given group of people, a given group of traders. Where we are seeing green, it means that trading session was entirely dominated by the buyers. So the buying activities were more than the selling activities. Where we're seeing red means the selling activities happened more in that trading session than the buying activity. But both traders were there. Yeah. Yes. So that is it. So now that can be sufficient. Yeah. First of all, to give you just the basic of interpreting the market, or knowing how the market is behaving. Yeah. If you can see, for example, here, see that we have this. Just a minute. We have this. We're seeing candles here. This is a red candle, which was dominated by selling activity. Now this is a green candle represented by a buying activity, dominated by buying activity. The next one, because traders are funny, look at this. After realizing there was a serious pump, probably by a pump by, let me just check through. Let me just try to measure. I see how much that was. Where is my, okay. Price range. Sorry, this one here. Okay. It is in the measurements. So, okay. So let me, just a minute. There's my president. Hey, what's up? Chopper. Here it is. Okay. So this movement was sufficient for some trader. See this? This was 2%. This green candle. This was 2.4%. Now, being 2.5%, do you know now what happened then in the next trading session? If you can see here, these are the next candle. Do you know what happened? The activity that dominated in that trading session. Yeah? This 2.6%, just assume all the people trading using Royalq had put 2.6%. What is going to happen in the next trading session? If this trading session ends, the robot will be selling, and closing, and you see the effect. Yeah, see the effect. Let me see the effect here. See the effect here on this candle, on this other candle. Now, do you know what now happens here? Let's try to interpret this candle. Let's try to interpret this. And I just want us to interpret this candle. Let's just try to interpret this whole candle. Let me increase the size to give you that good impression. Let me increase the size. Allow me increase the size. Right, there we are. Let us clear this off. Good. Now let's interpret this card. See, look at this. That this trading session ended with the dominances of the buyers. The buyers dominated, right? And of course, thank God, yes, their activity, their dominance resulted in the price moving up from here all the way to here, much as it came and closed slightly a little below. But then this movement, just like I explained earlier on, this one here gave a very good potential take profit to people who entered from here, or people who entered maybe somewhere down previously. But let's assume that, let's take for example people who joined from this point. They identified this entry opportunity and entered the market. And because of the continuous buying activity, what happened? They pushed the market up by 2.6%. And that was a good take profit percentage. What happened in the next session when this session ended? That the market, the trading session opened here. Are we all seeing this part? On the green, on the red candle? I hope it is not too small for us to. Is it visible enough? Is it big enough? See. Okay. All right. So I hope you're all seeing. So what happened here was that in this trading session, because there was a built-up momentum of a buying activity, much as the session closed at this point, this was the opening price. The closing price of that green candle became the opening price of the next candle. So that is the point at which the trading session started at. Now, what happened then? Because there was already a momentum of a build-up of a buying potential. What happened? Much as it closed here, still that momentum was transferred in the next trading session. Still after the session opening at this point, somehow the buying activity continued and the price went a little up again. But trust me, there was then massive exiting of the market. Massive sell then happened. Now, much as it opened from here, from this point, people sold seriously and a lot. And the market, the price fell down so much. So much to this low. Yeah? You see where the price fell? Up to that low. And then, that is not where it closed. The price reducing by almost half of this previous green candle, almost half of that previous green candle presented a very good buying opportunity again. Here, from here, this drop, this was almost by 50%. This is a drop of 50%. Now that is a good buying opportunity. Buyers then set in again, say, now let's move this price again. Let's move it. People again bought. Buying resulted in the price again beginning to go up. It rose up, but unfortunately the trading session ended when the price at least had moved up, at least not lower where it previously was, at least somehow up, right? Now, this movement up, what percentage is that? Remember, this is the closing price, the opening price, and this is the closing price. And you saw the effect on the color of the candle, that the opening price is higher than the closing price. Definitely, the candle is red. And because of being red, let's interpret this candle. Look at this pressure, this buying power that pushed the price all the way almost by over 70% of the size of this candle. Look at this, right from here up to here. This is almost over 80%, the size of that candle, meaning there's a lot of force, there's a lot of pressure that the buyers are putting in the market. There's a lot of buying happening. That much as they endeavor to push the price back up, the trading session unfortunately ended when, they had done some work. They had at least brought the price at least up a little, not to where the sellers were intending the price to go to. Now, the same thing, the same effect, the same buying pressure was transmitted in the next trading session. Do you see what happened to the green candle? Hey, this is where now the dominance was completely shown here in this other green candle. The same power that the buyers started with in the previous trading session was transferred to the next. Now, if you find a candle like this and you're able to interpret that, yes, I'm seeing, yes, the intention of the sellers was not so good, but again, it was good because it was presenting a buying opportunity. Now, if you can be important to see that, yes, even after the market dropping this low, still the trading session ended when the price was pushed back almost 80% of where it opened from. That means it is signaling something. This very same power may be transferred to the next trading session. And of course, that instinct didn't lie. You see what then happened? That much as it closed here, that pressure was too much. This closing price was not even sufficient to start the next trading session. See where it started? It started again very up, very high. It was not, the pressure was too much. The pressure was too much. The buyers were so dominant in the market. All right. Now, what happened then? Yes, it was a good move from here to this point, and it was transmitted back to that point that is almost somewhere here. Now, this is again another good take profit percentage to some people who entered from this point. Yeah, because of that effect of the take profit the price was somehow forced again to drop. But again, the buyers took up, pushed it back to where it started, then beyond, up to that far. Then by the time the trading session was ending, some selling activity happened, and that is where it closed. Yeah. Now the same story continues for this other thing. What is happening? So it's just the basic interpretation of how, if you can know that, then that is absolutely okay. Ladies and gentlemen, is that part clear? Is that part clear? I don't know whether I should go into the trend or I should postpone it for the next. But it was worth it sharing that interpretation, yeah, of the market using the candles. Are we on? Do we continue? Can I?
I think, coach, you add it up to trend line. Add it up to trend lines. Push it up to trend lines.
Okay.
Yeah, sure. It will create more meaning.
All right.
Thank you so much.
Okay. Yeah. So let's proceed now. Then now I'm going to introduce in the trend line. Now the essence of you of me introducing that's basics, simple way of just interpreting the market using the candlestick is to build in a bigger picture of you now understanding the market better and be able to follow and analyze the market better with that background in mind. Yeah, because honestly, we talk about time frame, 4 hours time frame, 3 hours time frame, which is the best for analyzing a coin. But literally, do we know that there's a lot hidden in that particular time frame as represented by the candle? Those candlesticks are not for fun. They are just not there for you guys to say, okay, if it is going like this, it is going up. When you don't know the basic interpretation of the candles there. When people are talking about the doji, they're talking about the gravestone, those different types of candles, the hammers. You hardly can even understand and interpret. For you, just when you're looking at when you're analyzing the market, you're interested in where's the doji, where's it. Yet, if you had that at the back of your mind, it will be simple for you to know when to enter the trade. Yeah, it will be easy. Yeah, you won't be chasing the market. Yeah, so let's dive into this now. The importance of this is what. Okay, somebody's saying I don't understand when you use the same wick in that red candle to talk about buying and selling at the same candle. All right, it is okay. Suma, what you need to know is, I think I started by building in the general concept of what trading is. Trading is basically buying and selling, and this thing has been made simple through this guy who introduced the candlestick. These guys were able to really understand and look for the best way of interpreting or reading the market, because you can't be there. I'm assuming if it was a physical market, can you be in every market? And with the advancement that we have gone into, I think we are even blessed. This guy is so good, because if we saw this at the moment, look at what we're doing. At the comfort of our respective homes, we're able to analyze the financial market. We want to invest in stock, we just go and look at the history. We look at the performance. How is it like? Are people buying more? Are we experiencing a lot of selling pressure? Are people selling a lot, and why? Are people buying a lot, and why? Is this the best time for me to put my money on stock? Or I wait? Same applies to crypto. You are able to analyze what traders all over the world are doing just by looking at the chart, looking at the past history, the past data, the history of the performance of a given coin to the current, so that you're able to predict the future. That is basically that. So the concept of trading has been simplified using the candlestick. And the candlesticks is transformed into the chart. Now the chart is now the collection of the behaviors of traders in the different trading sessions, as depicted by the color of the candle. It is now showing you the behavior, the behavior of traders in as far as moving the price and lowering the price is concerned. So Suma, this is just the same thing. In every trading session, you see, whether you see a red candle or a green candle, just know that is a trading session. And a trading session must have buyers and sellers. But the color comes in play depending on the dominance, the dominant group, or depending on the activity which were more in that particular trading session. That's what brings out the color of the candle. In simple, I'm just simplifying it, but in other words, if you were explaining it in that terms of the candle, you realize that a green candle will be formed when the opening price is lower than the closing price. If the price at which you bought at or you entered a given trading session is lower than the price at which that particular trading session ended at, then the candle is going to be green. If the opening price of a given trading session, or if the opening price of a given coin is higher than or is above the closing price, it means that candle is going to be red. And the interpretation is that there were more of the selling activity than the buying activity. And still again, it means it is representing the bear. It is representing a depreciation in value. It is representing a drop in price. Yeah, because you cannot, and in that case, you cannot sell because you cannot sell at a loss. Yeah. Okay, let's go to the chart. Let's just go to the chart and. Oh, okay. Yes. Let me first reduce this and share this. Let me share my screen. Okay. So, just a minute. Try to show. Okay. What is this again? Okay. Try to close this. All right. Okay, so let me share my screen and go through the chart now. Now, ladies and gentlemen, having understood the interpretation of the market based on the different trading session as represented by the candle. Now, what gives meaning to price action or market analysis, or what we will call technical analysis? What gives meaning to it? Now, what gives meaning to your analysis is when you are now able to look at the bigger picture of the market of that given coin, how it has been performing previously. How low did it ever, what was the lowest price so far previously that was registered? And then where is the price currently? Now, what is most likely going to happen in the future? Am I looking at the price lowering down to the previous low, or to the previous price it previously went or dropped to? Or I'm most likely to see it move up. That is when now you introduce in the element of the trend line. The trend lines are tools that helps you to monitor a trend, to monitor the movement of the market, to monitor the behavior of traders in the market in the different time trading sessions. That's what trend lines helps us to do. And we have different types of trend lines. The trend lines, we're calling the support and resistance. And then there are trend lines that are particularly drawn just to monitor an uptrend. Then there are trend lines that are drawn to monitor downtrends. And then, yeah, so basically, those are the tools that helps us in monitoring. Now, how do you monitor the market? Without using any indicator, you are supposed to know how to draw trend lines, because trend lines helps in now giving you the bigger picture to make decision. Yeah, because you're not going to base on a single candle. Yes, candles will give you some clue, but then you're not going to entirely base on it alone. Yeah, to make decision. You must look at the general performance of the market of that particular coin before you can decide. So that's when we introduce in the element of the trend line, ladies and gentlemen. Now, we have 3 types of markets. This is what we all know, probably. And we have what we call an uptrend market. An uptrend market is where, you know, continuously the price is increasing. Yeah, not in a linear form, but definitely continuously. Yeah. Where is my, just a minute, let me try to look for my drawing tool. Okay, what I mean is this. An uptrend is where you're seeing there's this pattern of movement in the price. The price is generally moving, you know, is increasing, because if you look at this point, it's not the same as this point. This point is not the same as this point. Yeah? Continuously, you are seeing an increase in the price, generally over time. That is what we call an uptrend. You can draw a trend line to monitor that trend, to look for possible points of a price drop, to look for possible points of market reversal or trend reversal. You can use trend line to monitor. You draw it, monitor. Whenever you see things not happening the way you wanted it, it means the trend has changed. I'm going to show you that. Then we have this kind of market where you see this kind of movement, right? The general outlook, we're seeing a decrease in the price. The price which was here is not the same as the price here. It's also not the same as here. It's not the same as, the price is continuously dropping, generally. Not in a linear form, but in this zigzag pattern or in a wavy pattern. This is what we call a downtrend market. This is an uptrend market. Then we have another type of market we are calling the ranging market, where there's no clear movement, there's no clear path as to whether the market is going up or going down, but it is just moving about some 2 points, right? We may have something like this. Then you have a little drop, you have a little in middle kind of movement, then you have that, you have this, right? The general thing is, if you try to draw a trend line, you realize that, you know, the market is just moving about some 2 points. About some 2 points. It is not having a clear uptrend movement, neither is it having a clear downtrend movement. It's just about playing about some 2 points. This, through the trend line, you're able to tell the kind of market you're dealing in, or you're analyzing in. Yeah, because now you are presented with multiple trading sessions, but you want to see how so far previously the market was behaving. All right. Are we clear? Are we okay? Are we okay? Do we proceed? Yeah, some feedback now. I just want to make sure you're following. Yeah. Are we fine? Are we fine? Are we okay? And people are silent.
Yes, please go on.
Okay. All right then. Okay. So these are the 3 types of markets we have: an uptrend market, a downtrend market, and then a ranging market. Now the trend lines literally helps us to go through this, to understand these markets better, right? I'm going to begin with, now you can do monitoring in different ways. You can decide to monitor, you can decide to use horizontal trend lines to monitor a trend, or you can decide to monitor a downtrend, or you can decide to monitor an uptrend. And I'm going to begin from a downtrend, right? A downtrend market. Now, why must we monitor a downtrend market? Let me first clear this and then come here. So I'm going to draw before even the chart, because we're just going to confirm the chart. Before, let me even push the chart the other side so that I have some area to. All right. So let's talk about a downtrend movement. We're having this kind of movement up. We have down. And we have down. Down. Probably. Let's assume that is the market. Now, a downtrend movement or a downtrend is characterized by lower high and lower low. The lower highs are the highest price that has been registered in the course of the market moving down. Then the lower low refers to the lowest price registered in that course of the downward movement of the price of the market. Yeah. So in a downtrend, these other peak are what we call the lower highs. Yeah. Then these other lower peak, lower parts are what we call the lower lows. Lower high and lower low. Hey, you forgive me for, you know, I'm hardly finding it, I'm hardly writing because it is becoming, all right, but at least that you understand what I'm trying to mean. So that is a downtrend. It's characterized by lower highs and lower lows. Lower highs being at least the immediate highest price registered as the trend is continuing down. Then the lower low is the immediate lowest price registered in the course of the downtrend. Now, why you can monitor a downtrend? Why would you monitor a downtrend, ladies and gentlemen? You monitor a downtrend, you draw a trend line to monitor a downtrend because you're looking out for a breakout. You're looking out for a breakout. You're looking out for a point within the trend where finally a reversal is going to happen. You're looking for those signals. At what points within this downtrend am I most likely going to see a trend changing, right? Forming a lower high and then finally continuing, yeah, to form for me a higher high. Yes, because that is the essence of monitoring. Now, let me undo this part. That is what you're looking out for. So let me draw a trend line. So how do you draw a trend line to monitor a downtrend? You draw a trend line to monitor a downtrend. You draw from the top. You draw from the top, ladies and gentlemen. You draw from the top, connecting lower highs, right? You connect lower highs. Objectively, not subjectively. You don't have to force it. You don't force it. When you're monitoring the market, when you're doing technical analysis, you don't force. Don't force. The market is not your friend. You don't force it to appear like what you want, because you'll be wrong. You'll be disappointed. Draw it objectively with an open mind. Yeah? Draw it with an open mind. Objectively, not subjectively. Any point where the trend line is not going to touch, it is okay. It is okay. But look out for any 2 or 3 points, any 2 or 3 lower highs, and make sure your trend line touches it. Any 2 or 3. Remember, before a market begins going down, probably it was previously advancing upward, isn't it? Then it reached the point where a reversal happened. There is an about turn. Let's now continue going down. Let's begin going down. So that peak, that point where the about turn happened at becomes your swing high. Swing high, or what you call higher high, the last higher high that was registered, the highest price registered so far before the market trend reversed is what you call the swing high. That is the point of reversal. Now, as you're going down, you're also beginning to look out for swing low, a point of market reversal where after the long journey downward, you are now going to see again a journey starting in an upward way. That is the opportunity, that's what you're looking out for. So definitely, when you're drawing this, when you're monitoring a downtrend, you connect your trend line to touch any, sorry, zigzag, but just for purposes of 2 or 3 lower highs. Now, when you draw a trend like this, remember, you hear what you're seeing is that the price, the market is moving below your trend line. It is on this side, isn't it? It is on the left-hand side. This is the right-hand side. The market is trending just below your trend line. This is your trend line, and the movement of the price is just within, it is below. But the essence of drawing this trend line is to monitor a point where the price is going to come up, right? And you're going to see a candle, a green candle, ladies and gentlemen. It should be a green candle. That the last candle going to be formed here is going to be a candle that will probably start from below the line and it closes above that line, right? Finally, right? And then even the third one begins building up and continues up. This is what you would call a breakout. BO. That is a breakout. It means you have come to the end of the downtrend. Now you are ready to journey up. It should be a green candle that should be formed below the trend line, but then finally closes above the trend line. Then the other two that will build up will still be above the trend line. Then you will somehow say, we have changed the trend. I think we are ready to journey up. You would have therefore said a breakout has happened. A breakout would have happened. A breakout presents an entry opportunity because if you're a long-term trader, this is a good point to enter. And relax. It will journey up. And you get whatever profit. More repeated one, you can always take little and exit. Yeah, little and exit. But if you're a long-term trader, the day, the week, relax, enter, wait. It will journey up. It will journey up in most cases until it comes back to the very point of market reversal. Then after reaching that previous area of market reversal, it will have two options. It will have two things to do. Either it will be rejected and the market again, the direction of the trend will again change, or it will build up and move above this previous swing high. And once it does that, we shall also say again, a breakout has happened. It has moved above the previous swing high. So we are ready to continue up. Are we okay? I hope it's not so complicated. I don't know. Is it okay? Are you trying to follow? Is it becoming order? But of course, are we still there? Are we still there? Okay, I'm assuming the silence is yes, we are there. And do we continue? Okay. Yeah, you see, ladies and gentlemen, it's really important. It's really very important because what I know is that once we understand it, it is an industry we're already in, and we're not going to run away. And we're not going to pretend not to understand it. We have to understand it. We have to understand this financial market because honestly, we have started the journey. There are people who have moved miles away already, but we are right behind them, and we must move. We must move. If we are to remain in this crypto industry, we must do all that. We must learn. We must understand. We must be on the same page with the people who are what we would call the pro traders. Yeah, this is what people have been doing, and we just didn't get the chance of knowing this. And now, since we have to learn it, because crypto is here to stay. As we always say, it is here to stay, and we shall trade for as long as we want. Yeah, we shall trade for as long as we want. Yeah, so that is basically, so we have to understand this. So that now, it will reach a time you just play around. Come on, you don't teach your children, teach the generation that will come after you, and it will be an amazing experience. Yeah, yeah. So that is just an example. I'm going to put, somebody's asking I should put on this. Yes, I'm going to do it practical in the chat, and I shall appreciate. I'm just trying to build that picture. Yeah, yeah. So that is a downtrend. So we monitor a downtrend to look out for a breakout opportunity, to look out for a point of a breakout. A point where the candles are going to form, right? And close above the trend line we have drawn. Remember, you draw it before and objectively, not subjectively. So that when now, because you drew it with an open mind, when that happens, you don't hesitate to say yes. You won't even think twice, because it would have come to pass. Yeah, it would have come to pass. Yeah. So yeah, so let's continue. That is that's a downtrend, right? An uptrend. Why do we monitor an uptrend? Remember, we have already entered the market, so we want to see how long or how far shall we go in as far as trending upward is concerned, right? How far is the trend going to continue, so that we can make the right decision and either exit early, right, before the turnaround happened, or the turnaround happened, or before the market reversed. That's why we monitor an uptrend. Yeah. So let's take, for example, we have this kind of market. We have an uptrend. We have this, and there is that, and that, right? Why do we monitor an uptrend? Now, an uptrend, first of all, is characterized by two things: higher high, yeah, and then higher what? High lows. The high highs are the peak, yeah, and then the higher lows are this other part. This other part here. This is the higher low. Yeah. So the high highs are the peak in price in the course of the market moving, or in the course of the market trending upward, and then the higher lows are the lowest price registered in the course of the trend trending upwards or moving upward. Now, when we're drawing a trend line to monitor our uptrend, we draw it from below. We draw it from below, connecting 2 or 3 higher lows. And as we do that, we do it objectively, right? Because before we experience an uptrend, we would have experienced a downtrend, and we reached the point of a market reversal. where that point of reversal, right, becomes what we saw, right? That is the swing low. That's the swing low. Now, when you're drawing the trend line, this is what we do. We pick our trend line, then we connect any 2 points. Sorry. Connect, but let me show my, where's this? Okay, we draw this. I'm going to demonstrate the practice. So when you draw this trend line, now this is it. This trend line is helping us to see how far is it going to go in terms of price increase. I know it is not going to be linear. It is not going to be from here upward. No, it will be gradually and building up gradually. But we want to see how far. How far? Because there's a point that is going to happen, obviously, where we shall have, again, a downward movement. Or there is a point where we're going to have a market correction, right? If we are to continue upward, we're going to have some kind of a downward movement briefly, about 50 or 30% or 50% or 6% before we can continue, right? But we want to see how far before this kind of reversal happen, either a reversal for a correction or a reversal for completely a downward movement. We want to just see how far. So the trend line, when we're drawing this, we draw from down. Now, we draw a trend line to monitor an uptrend, to look out for what we call a breakdown. A breakdown. A point of a breakdown. What is the point of a breakdown? A point of a breakdown is a point within the market trend where, if previously the market was trending upward, a red candle is going to form. Let me even represent you with a red color. Is going to form from above, because remember, every other you were smiling. It was just above your what? It is above your trend line. Yeah, we are still continuing. But then a scenario is going to come where you may think it is coming back to correct, but end up opening there and closing below this trend line. Then before you know it, another one. There. Now here you would say, a breakdown has happened. There's a possibility that things are not going to be the same again. So let me exit. I think this percentage is enough. What I've taken is enough. Because if I decide to stay long, then I should be ready for this downward journey, this floating, this dip. If you're a fan of buying the dip, then you can hold on, keep on buying, and wait for the next upward movement. But if you want to wait for an opportunity of, since there are very many coins, you want to wait for an opportunity of buying when it is low and you're yearning up, then you can exit. So you're looking out for what we call a breakdown opportunity, a point in the market trend where the price, the trend has reversed and you're ready to go either for a market correction or a journey in the opposite direction, which is a downtrend, right? Yeah, so that part is understood, yes. The last bit is when you're monitoring a ranging market. Now, the ranging market is still the same thing, the same concept of identifying a breakdown and a breakout, only, same concept. Now, when you, of course, you're drawing let's assume we have this market, the ranging market, right? You have this kind of movement in this. You probably have that. This kind of movement, right? You will know that this is a ranging market. So definitely you draw a line there, and then you also draw a trend line there. Now, this is what you also need to understand. Still, you draw it objectively, not subjective. You draw it objectively. Now, what happens here is that, yes, you're bound to see, remember, when you're monitoring a ranging market, you have swing lows, and swing highs. Yeah, you have swing lows and swing highs. That is what you need not to forget. We may have sub-swing lows and sub-swing highs. Sub-swing lows and sub-swing highs, like sub-swing highs, this will be the points where the market really didn't move to the previous swing high. The sub-swing low, it means there are points where, yes, the market was trying to come down, but it really didn't reach this previous point. It did not. It almost touched there and went up, right? Those are the points we are most likely to do. But when we are drawing this trend line, we have to look out for major swing highs and swing lows if you want to monitor a trend in that manner, right? Yes. So this trend we have drawn, this trend line is actually the support and resistance. In this case, this is our resistance line, and this is our support line or support area. An area of support and resistance is not a line, but it is an area within which where if it is a resistance line or a resistance area, these are points within the market where if the price tends to move up, once that area is reached at, suddenly the market reverses, the direction of the market reverses. When it decides to go down, it reaches a point where once that area is reached, the market reverses and begins going up. So that point that provides a block for the price to continue up is called a resistance area or resistance line. That area down, which prevents the price from dropping further, is called the support area or the support line. Now, that is very important. Now, we draw this connecting major swing lows, major. We are most likely to see points where, of course, we shall see some candles moving below the lines we have drawn. It is okay, because they what we call fake breakout and fake breakdowns. Of course, those are normal. But just connect those key area. At least I know this part is connected. This part is connected. Probably if this was another, maybe this part is connected. So I'm good, right? At least I am able to monitor. Now, a point where you're looking out for what we call a breakout opportunity and a breakdown opportunity when you draw this trend line, when you're monitoring the trend in this manner. Now, a scenario where you see a candle is going to move from this area of support and comes up, and instead of being rejected from continuing up, rather a green candle forms, builds up from there and closes above. Then another one begins building up there, and then you see things are beginning to move in that manner. You just know a breakout has happened. So meaning this area here, this force, which was trying to cause a barrier, has finally been broken. And now you're ready to journey up. That is a breakout. So this one presents an entry opportunity. You can now enter. And as you enter, keep your eyes on the previous swing high. How far? Sorry, how far? What is this? Yeah. Oh, sorry. Okay. So, oh man, what is this? Okay. So you need to keep your eyes here because, oh shit. Oh, sorry guys. Yeah. Okay. Oh, okay. So you want to make sure you look at this. Why is it going off? It is a trick. Okay. Okay, so you look out for you have to keep your eyes here in this previous swing high. That once a breakout has happened, keep your eye on the next swing high. Where was the next stumbling block? Where was the next area of resistance previously? So that means you need to make sure you monitor, decide, and see. Has there been a point where some price reached around that point? If it is, then yes, that should be an area of the next resistance. So meaning if you're going to take profit, you take from here. First of all, don't exceed that point, right? Don't be greedy and exceed the point corresponding to the previous swing high after this breakout happening, because that will be another area of resistance. Because once the market reaches there, you're most likely again to see some kind of downward movement, yeah? So basically that is that. So the same applies to when you're monitoring, when you're identifying for a breakdown opportunity. A breakdown opportunity can be that point where you realize that after the price being rejected here, after the price being rejected here, right? After it being rejected here, it comes as if it is coming back in this area of support, thinking that it may be supported here, but rather the momentum at which it comes down with probably may be so high to a point where now this time a red candle is going to be formed. A red candle will be formed, of course, it will build up from above your trend line, and then it closes below that trend line, and then another one keeps on building up from there, and then another. So at this point, you will now confirm that a breakdown has happened. So meaning, as the market was previously ranging, I think this time it has lost the momentum of ranging. Now it is ready to really take me down. So this time it will now be trading below your support. So in this case, you don't enter such markets. You don't enter at the point of a breakdown. You enter at the point of breakout, because this is the point that presents an entry opportunity for an uptrend. This one gives you a signal for a downtrend when a breakdown happens. Ladies and gentlemen, are we following? So that we go now on the chart and summarize. Yeah, are we there? Yeah, so some love hearts, guys. Yeah, it has been a long session. I know people are tired, but yeah, it is worth it, I believe. It's worth it. Okay, so let's finalize. Let's finalize. Yeah. Let's finalize. Yes. Thanks for the watermelon. Yeah. I must enjoy the watermelon. Yeah. So. Yeah. Thanks, Mandy. Thanks very much. Shem. Thanks. Yeah. Just like I said, those who took an opportunity of being part of the Zoom today, probably there's something new here. It may be similar to somehow what some of us already know, some of you already know, but it may also be of good consumption for those who are probably joining it for the first time, or the entire industry is still new to them. It may be helpful to help them expound the knowledge and be open now that yes, where I've gotten to, I think I have to be open to learn. So it will give them those impressions. This is specifically for those who love the one shot, because one shot is basically, I would say, is for the pro traders, probably, I believe, because with pro traders, they know when to enter the market. They know the coins they are supposed to trade. Because honestly speaking, most of the coins we have, you have about 2 or 3 kind of coins we are currently trading. There are coins that are very, very volatile, very volatile. Then there are coins that are moderately volatile. Then there are coins that are, their volatility is very low. Now, why would you understand this? Because this part becomes very key and important when it comes to setting up the take profit percentage and then the margin call drop. The margin call drop percentage differences you're going to set for a coin that has low volatility may not be the same as for a coin that has very high volatility. Because those coins with very high volatility, definitely, if they're going to dump, if they're going to really go down, they drop by very big percentages. So therefore, it will call upon you also having that practical aspect of considering on how you're going to allocate the margin call drop percentages. Yeah, those margin call drops, those percentages. So it is really very important. Yeah. And also the same price for those with low volatility. Probably you may set the percentage call drop slightly small, because those ones, there are some coins that has very low volatility. They like trading in ranging markets. They hardly, give very good pump or very, very, very good dump. No, they just trade within the range. So such coins, you don't give them very big margin call drop differences. But those which are very volatile, you will have to. So this is the practical aspects that helps you to do exactly to know what to do when it comes to allocating the margin call drop. Yeah. So let's now go on the chart and try to practically do what I just explained. All right, now this is 1 hour time frame. I'm going to base on this 1 hour time frame. Now, I already said areas of support and areas of resistance are points within the market, where market tends to respect, the prices of the coins we're trading tend to respect so much. There are points where once the price drops at, the trend of the market reverses. There are points where once the price arrives at, the trend of the market reverses. That is what we call the support and resistance areas. Yeah. And we're going to identify when you're drawing this support and resistance line, you must make sure you identify those key areas of swing lows and swing highs, swing lows and swing highs, right? Those key areas. And I'm going to give you that. Let's track it up. Let's begin with this. Can we all see this point? Let me use a blue color. Okay. Can we all see this area? Increase the thickness. Do you see this area? Are we seeing this area? Isn't that the key areas of swing low? Swing low. It is an area which the prices have respected often. At least this was the first. Then there was another testing here. Same area. That becomes a key area of support. This area is providing serious support. It is preventing this price from dropping, my friends. It comes as if it wants to drop. I say, no, don't go beyond this point, please. Can you change direction? Go back. Now, you see this area so far where this where the market is trading at? The possibility of coming back here is there. Now, depending on the momentum at which it is going to come with, if it comes with low momentum, definitely yes, it will be supported again. But if it comes with too much momentum, then it will break down. Meaning, we shall see now the coins trading below this area. Ladies and gentlemen, let's draw that. That is our support, key support area. So if you draw this line, we want to see previously, is it also the same that some price respected this same area? That's what we want to know later on. So we are going to track back and see so that we're able to confirm that, yes, it is a key area of support. So let me clear this and draw areas. So let's draw this. Okay, let me pick my, you can use a trend line, basically. You can use a trend line to do that, right? You can use a trend line, or you can use, I like using this, but let me just use yes, let's just draw, let me pick just a trend, let me use a horizontal line. You come here, pick your horizontal line, put it here. Let it touch the lower wick, that lowest point, all right? The lowest point, top. There we go. Let me increase the size, the pixel, so that it is visible. Okay, increase that, and I make the color to blue. Is that key area of support? Yes. Can we go back? Can we track back in time and we see if there are points that so far were respected, that price respected previously? So let's track back. Just a minute. Can we track back? Because so far where we are, yes, we are in the areas of the most bearish points. Yeah. Let's see. Do you have any points somewhere behind? We can use the very same time frame, or we can even go back and check, use the bigger time frame. Let me just use the bigger frame so that we have the area covered quickly. Let me just come back to the 4 hours. So yes, we want to make sure. Sorry. Let me reduce the size. This size. Yeah. Yeah. Let's check it out. Now the data. Okay. Almost. But so far that is where we are. If I use the 1 day, maybe it may take us there. It may take us there. By the way, you see this area? This is where we are. Just as because we use the this is 1 day, but our candles were our lower swing high is around here. Those other two we are looking at is around just here. But if you track back, you see this point? Actually, there are points where you see this. In fact, there were moments where it even traded below. So we are right. We are right. Previously, when it was trading below, this was a resistance. But now that it broke out, you see when it broke out, hey, there was this pump, all the way up to there. Get that? So this one is a key area. All right. So that is just one. Let me go back to the 1 hour. We're just using 1 hour just for demonstration, please, as we draw the support and resistance. So that is a key area of. That's a key support area. Now let's identify another key resistance area. All right. Let's identify another point of market reversal, because now we are narrowing ourselves down to this part. We are now moving towards where the price is currently, where the price of this coin is currently trading at. So we are coming here. See this? This is the area. This is the price where the coin is currently trading at. Now we have the closest area, the closest areas of support down. We have at least this area. This is at least the closest to where the current price of the coin is trading at. This is almost also the same. See? Some points. So let's try to draw this. This is another point. So let's try to draw another line there. We are trying to narrow our area of concentration. Remember, we begin from the bigger area, then we now we narrow it down. Let's come here. Ladies and gentlemen. Okay, let me pick this, put it here, right? Do we put it here? Put it there. Yes, is it? Yeah. If you try to track back, do you have any points that was previously supported by that line? Do we have those points? Let me talk to the 4 hours. Do you have those points? Yeah. Yeah. So it becomes a key area. Because when you track back, there were those moments where it touched. I think reduce. Okay. So if you have to track back, it becomes a key area. Then we now look out for the previous swing high. Let's look out for the previous swing high. Let's look out for at least a point. So this is another area of this is another area we can draw our trend line. Sorry. This is another area. You see this point? This is another area. Yeah. Because if you check previously, yes, so we can draw also our line there. So we pick our trend line, put it there. Yeah. So we've drawn that. Okay. Then another area is this. This is the most recent, at least for now, the highest price registered within this area. Yeah, at least within this area, this is our highest. This is our highest point so far registered in terms of price. Yeah, yeah. So that means that will be our swing high for now. So when you draw that, you pick your trend line and put there. You just have to put it there. You have that is one. Yeah. So for now, for now, we can stop at this point, and let me increase the size so that I explain something here. Okay. Now, Let me increase the size. Now, this is when we are using the monitoring this market. Now, let's check on this area. Now, if we come and check on this point, this market, yeah, we realize that this is where the coin is currently trading. This is the lowest area so far registered, but this is the lowest swing low, swing low. We would probably take that this was the correction, the market correction. But then we have also, this is where it is trading at, this is the swing high. Now, meaning if your price is here, right? There's a possibility that it will come up to that and it will be resisted here and it goes down. Or there's a possibility that it will continue from where it is going to come down, right? And it will be resisted. Sorry, it will be supported. Or it may come down and it will break down. Those are the scenarios that are going to that are most likely to happen. The reality of things. Because if you see, when it broke down here, this was the support previously. This was the support. But when it went below this support, yeah, the next time it was coming back, it became a resistance. It resisted the price now from continuing up. Say because it went down, now you continue down, you remain down. Still, after it was resisted, it came down back. It got a new support. This is a new support. Now, on getting a new support, on gaining momentum, it came back to the previous, to the very same resistance area, this area that resisted it from going up, and it was again rejected. Now it is again going down. Now, two things are going to happen. This coming down may result into it coming back and get support from here. And in the process of gaining support, it will be gaining momentum to come back finally and break out. Or it's coming down, right? Or it's coming down will now be in such a way that once it comes down, the support force may not be sufficient enough to support it or to prevent it from going down. And at the end result, it will continue down. It will break down. This is breakout. That is what is most likely going to happen here in this market. Two scenarios. It will come down and be supported, then it continues up, or it will come down and it will break down. Alternatively, if it comes up, it may be resisted again, and then it continues down, or it will break out. It will go past that line and go back to where it was previously trading. That's why I'm saying if it breaks out, it is an entry opportunity. You enter, but look at this point, because that will be another area of a barrier. Yeah? Because it is most likely to come up and it will be resisted by that area and it comes down to this. This will now be the new support. It is previously a resistance, but it will now be the new support. Yeah, so you look out for that area or you look out for this other area. Okay? So this is what most likely. So this trend line is going to give you a signal, is going to make you understand points of a breakout and points of a breakdown. When a breakdown happens, it means that is so bad. If you hadn't entered the trade, don't enter, because the breakdown means this price coming down here to this support, and instead of being supported and it reverses direction, it just continues down. So meaning now it will start trading below this trend line. It will begin trading below the support. It will now be within this area. This one will be now the new support. This point will now be the new resistance once it goes past this line. But then also, if it comes down and it is supported, then it will continue up to this resistance area. And once it clocks the resistance area, two things are most likely to happen. Either this area will be too much for it to break through, and therefore it will again be bounced back. It will be resisted. It won't continue. It will go up, right? Which is a resistance. So now for the third time, if it prevents it from going up, it becomes another resistance. So it would have retested it twice. But if it comes from hits from after touching this area, if it goes up with some good or sufficient momentum, just be rest assured it will break out. It will go past this point. And once it goes past that point, this is an entry opportunity. Enter again, because you're going to see the coin trading above here, above this line. So that is the essence of monitoring, of drawing the horizontal support and resistance, is to identify a breakout opportunity and a breakdown opportunity. Let's check it out from in history when that happened. Let's check it out here. Let's just come back here and see something here that let's go back in history. Now, let's see this point. Let me check on this point. Now, look at this area that when, look at this point, the price came. I'm now going to consider this line. The price came and break down, went below this area, this line. On breaking down, it came back, right? And again, broke down for the second time. Came up, so meaning this area was trying to present some area of, you know, of resistance. Now on reaching here, it had to come back. It got a new support. This is the support. Once it was supported, it came back to this very point, this very resistance area. And on coming back, after being resisted, it came and broke down. It went past the other previous support. It went past it and got another new support. Now, on getting this new support, this momentum was sufficient enough in that it wasn't able to be resisted, you know, in this area. It came right all the way back, yeah, to where it belongs. And it was resisted there, it came down. Now, you see this? This is the manner of what we're trying to, this is the nature of the movement of the market we're trying to talk about. Yeah, that always an area that has been, if the market breaks out, right, a point of a breakout becomes the new support, right? And then it has to look for another area of resistance. If it breaks down, it has to look out for a new support. Where it has broken down from becomes the new resistance. And that's what we're seeing. It has broken out, it has broken down. This is a new area of support. Now it is going up, it becomes the resistance. It is again coming down to the very same support. Now it went back to the very same area of resistance. Now it has been resisted. Now it is coming again down. Now there's a possibility that it may come and touch this point, or it may just reach halfway and it reverses. Then on reversing, it may again be resisted, or it will break through. Right? Ladies and gentlemen, are we okay? Is that part understood? Drawing the area of support and resistance. We are not talking about when do I enter, when do I know. We are just still making you understand the concept. Then that part of will be next week. Part of now, when this happens, how do I enter? How do I determine when to enter? That is the part that is going to come to our next session, probably. But I hope it is okay. It's clear, understood. Hope it is understood. Is it okay? Okay, so I'm taking it that we understood. Now let's monitor a downtrend. Let's monitor a downtrend. Let me get rid of this. And we monitor a downtrend, and then we wind it up. Or maybe we have some question, one or two, and then we end it up for today. Okay. We're monitoring a downtrend. Go back to. Now, when we're drawing, I believe if we consider this area, if we consider this area, this one becomes our swing high, right? Then if you consider this one becomes our lower high. This is another low high, and this probably will also be another low high. And the rule is, if you want to draw a trend line that will help you monitor a downtrend, you connect at least, you can connect any two or three lower highs together. And which I'm going to do this. Let me just bring in that. Sorry. Let me try to introduce in that. So let me try to connect this point. So I could have now, for now, if I'd drawn this earlier, probably I would say this was the area I'm going to draw to monitor. But because we're not there, we're not yet there, this would be the next area that I am going to, this is what I'm going to monitor next. So this area. Good, there. This is what I'm going to monitor next. This trend line. At the moment, I'm taking it that the coin is trading below my trend line, right? So I'm looking out for an opportunity where it will come and touch here. Then I see a change. Candles beginning to build in that manner, right? Then I have that kind of movement. That will be called a breakout. But for as long as it comes and touches that area and still continues down, I'll still keep a watch. I'll still continue monitoring how far it will go before I can see a point where my trend line will be respected. A green candle will come, open from down, and then close on top, and then I see that kind of trend. Now, this is what I saw. This is what we can see here. If had we drawn the trend line before, like this, I have drawn, we connected our swing high to touch at least a lower swing, lower high, and then we experience a scenario like we are seeing here. See what has happened here? That there's a green candle that started from below this trend line, right? And then went and closed above the trend line. Then what happened? What followed? Huh? You see this kind of movement? Now, I'm expecting that if I maintain this trend line, and as long as this coin continues trading above this, there's an opportunity that there's a scenario which I'm going to experience that kind of movement. It will go up if this is what I'm going to base on. As long as it is trading above, that means I am still okay. But once it begins trading below my trend line, I know possibility of coming back here is very, very possible. You get that? But if it is trading above this trend line, which I've drawn, then I know that, yeah, it may just play about there, but I'll see that kind of movement up. Ladies and gentlemen, are we following this? Yeah. That is when you draw to monitor a downtrend. Now, this is just, I'm just trying to show you what to do. But then when it comes to the real aspect of the practical trading, then we introduce in, we can use in a combination of that horizontal line to see where we are, to predict where we shall be in the next. Yeah. So, yeah. Okay, Julius, I think it has been so heavy, yeah? Probably, if I don't know if it was, maybe it was light, but I think that is basically, sorry?
No, we are doing well. I think for someone who was looking for the information, it has been one of the sweetest moments.
Yeah, thank you. Yeah. So maybe, okay, let me now finalize on the last part. When you're monitoring it down, okay, this is just one example. I could do, let's just try to check backwards. Let's try to check backward. Let's play around backward. We're just trying to just to get acquainted to how to draw those trend lines. Assuming this was what we are considering, yeah. Indeed, I told you that for a trend, for you to monitor a trend, you need to have, first of all, witnessed the point where a trend reversal happened. Like in this case, you see, this was an uptrend, then we reached a swing high. At least this was a point of a reversal. And all the way we saw, woof, some serious downtrend. So it means, yes, a point of swing high you should have identified a point of a swing high at least. Then you look out for any 2 lower highs, yeah? 2 to 3 lower highs. Yeah, then what you do is bring your trend line, pick that. I said it should be objective, not subjective. Just be free, draw it freely. It doesn't have to be accurate, yeah? But at least you need to make sure you're on point. So I'm assuming I'm connecting this area. Okay, let me just say, let me concentrate on either this point or any 2 point. Like this point here is okay. These are multiple. Let me just show something here. These these are multiple. This is a week. There's another week because so this is a good point because there was a little bit of a little dip and then came back. So this can be my lowest high. This one, it can also be another lower high. Then I have this point which was almost being touched, but then I have my swing high. So you just connect that, just like that. Then you just go back and check what happened here. If this was what we were trying to look out for, yeah. So you know that this market all the way was trading below your trend line, right? Was trading below your trend line. Yeah. Then we had that. And finally, there was a green candle that started all the way from here. Manchester did not really touch there, but I would take it that at least this one confirmed the breakout, this other green candle. But at least you need to, first of all, look out for a green candle that will build up. You see, this build up of the momentum was too much. That's why you see the kind of very long. Yeah, then finally a breakout happened here. And then we saw this. Oof. Then what happened then? See that the candle is just, the market is trading the other side of the trend line. Yeah, much as it is coming, playing about like it is ranging, but at least generally it is going up from this point. Now we are there. If you entered probably at that point, you still get some profit because that was the fight had gone. Maybe if we had, we can, just a minute, let me just try it. You see that this is where we are so far now. It is ranging within this. You see, this is a ranging. It is trading about just this area. See this? It is after breaking out, it's just ranging. It is trading about this area. You see it, after moving up here, it is coming down, it is going about there, coming down. So it is just playing about, ranging. So we don't know what will happen next. Yeah, it may either come down, or it may go up, or it may even go and break out again. Then we see it going finally upward. So that's just how you draw this. So you're monitoring a downtrend to look out for a breakout opportunity. In fact, the best advice, okay, I wanted not to talk about, but the best thing is, if you see a breakout happening, trust me, you join. You can join, right? You can join the trend, but I will show you how. But just have the concept first in mind. Yeah, we may not exhaust everything today, but yeah. But at least have the concept that a breakout presents an entry opportunity. The how is what we shall look at in the next, maybe in our next training. So that is just one area. You see, we monitor that. And you can do that all the way, always, all the way. And you can still be in position to monitor the market. Yeah. So that is the essence of benefiting from the trend line, drawing those trend lines. Yeah. So when you're monitoring an uptrend, maybe that is the last area now. When you want to monitor an uptrend, what do? I told you draw from the bottom. You connect at least some two swing higher lows, right? The next two higher lows. Unfortunately, I would have tried out with the right thing there, but with where we are. But let's just assume that we're trying to monitor this. You see this? We said for you to monitor a trend, you need to first of all have identified a point of a reversal. So let's assume that from here, we want to monitor this kind of this movement, because at least it was some great movement up to around there. I think there was some good movement. So let's assume this is what we want to monitor, yeah. And yeah, it was a gradual, but finally it was there, all right? So let's say we want to monitor this movement. So what do? You're going to draw your trend line, right? Objectively, just, yeah. So let's try to do that. Bring my trend line, connect NA lower, connect to NA 2. You must connect to key points of, key points, yeah. I told you there are possibilities that, of course, you will see some points dipping a little below, but you need to ascertain whether it is a false breakdown or it is a real breakdown. Those moments normally happen. Those are things you need to understand from the market. So if you have drawn this, yeah, you can generally monitor this market. Yeah, see this? That's the meaning. See this market that you at least were able to, some elements of some breakout happened, some breakout happened here. See, somehow there was some resistance that wanted to come in play, but finally it was overpowered and it had to go down below the trend line. Because if you check here, if I can enlarge it a little, if you can check it clearly, you can see that there were multiple candles. We call it decision candle that were formed around there, deciding whether should we continue or we first do a little bit of correction, or we first 20 chini kidogo. Let's go a little, at least a little, just a little, yeah. Let's go. So you see here, this area, this point here, a lot of things happened around there, but finally, you see this? What happened here? That it was a clear breakout. A breakdown. A breakdown, a red candle building up from above, and finally closing below. And here it is. So a trend line, just like I said, it should be. It doesn't have to be very accurate, but as long as you draw it with free will, with open mind, and then objectively, without forcing it, you will always at least see some signal. This is just an information, something that gives you an information, a clue, yeah, a clue to help you decide, yeah, because you don't know what is happening actually in the market, but you want to see, is it the best time to enter, or I hold on a little, yeah, just that, only that, just that, right, ladies and gentlemen, just that. So you can do that all the way. Like here, you can as well monitor this. See this one? You can monitor this and decide to monitor this as well. This can be another point. You can draw it there. You can draw it from here. If you want to touch the wicks, just specifically, you can monitor the wicks. That is if you want to concentrate on this point here only. But at least at every point, there's a confirmation of a breakout happening, a breakdown, sorry. At this point, you use this, you are connecting these 2 points, the swing low to this true, you witnessed this happen. If you're connecting this point, and finally somewhere here, after being touched, you saw some little bit of a pullback, but then finally a breakdown happened. Breakdown happened. That's why you see a green candle, a red candle building from above and closing below. building from above and closing below. Just that. Just you don't have to complicate it. Just keep it simple. Just keep on practicing. You guys will be amazed. At least you'll be if you keep on practicing how to just monitor the market. Just draw your line, right, and leave it there. Come and check and see what happened. That is how you practice. That's how you gain certainty. That's how you gain confidence. Come here, like for example, let me come back here to where. Sorry. Clear. Let me come back to where the price is currently. Sorry. Yeah, let me come back to where the price is generally. Now, at the moment, you can just draw this. Like I told you, you can draw because this one here seems to be in the look. If you can check on it, seems to be a downtrend. Yeah, at least from this point. This is generally a downtrend. You may say it may be a ranging market. If you want to look at it in terms of a ranging market, you can just decide to do this. You can just decide to, at free time, check for this point, mark it, draw a line there, come down on this point, right, as a swing low, mark it there. Now, after marking that, you now have an area of concentration. Yeah, you want to monitor. Yeah, you could as well monitor it in terms of a downtrend here. In terms of this kind of trend, you want to see. At the moment, this is your line. You've drawn it very well. It is 1 hour. Probably you can check it maybe later on or in the evening and see what happened, or tomorrow. Just draw this. You see how it is going to play around. Or you can just mark it out like I've done. See this? This is a critical point, right? So you can draw that horizontal line. This is another critical point as a support. This is as a resistance. Try to monitor how the market is going to move about these two lines. If this comes here, wait for it to reverse and begin seeing a buildup of candles here moving up. That's when you enter. You don't enter once it has touched, because anything can happen around this area. It may go against you. First, have certainty. Have a clear picture. Have a clear pass. Make sure that at least a reverse has already happened. Then you can join from around there, and then you see. Measure from that percentage up. I mean, from there up to the previous, swing high, where it previously reached in terms of price, and see as you take profit and see what happens. Yeah, just see what happens. Monitor. Just monitor this area. Monitor. Draw your trend line. Save it. Yeah, and see. Check tomorrow. Check later on, and see how is market playing about these two areas. Trust me, by tomorrow you will see that it is either playing about this point, or a point has come where a breakout has happened, or a point has come where a breakdown has happened. The price has broken below your line. That's just how you monitor. You don't have to stress it. But for an entry opportunity, I think that is what I wanted. I will talk about it in our next training. But if you have that in mind, I gave a little tip already that you don't join, you don't enter when it has just started. Wait for a clear path. If it has really reversed, yes, it can be evidence. It can be evidence, yeah. And when it touches here, right? If it has reversed, you can tell. But if it has also broken out, you can tell. Because after breaking out, you can enter. If it has been resisted, you don't enter. You wait. You only wait for a point of a reversal on the support area. That's when you enter. Then the next point of entry is you wait for a breakout. That's when you enter. You don't enter from below the resistance line, right? No, you don't enter. You wait for a breakout. Any area above that resistance, once a breakout has happened, you enter. If the reversal happens and then you see it comes and touches the support area, right? And then you see a clear path of a reversal trend of the market, direct market direction. That's when again you enter. An area near the support, you can enter because you still have a moment of movement up back to the previous resistance area. This that. All right, ladies and gentlemen, I think that is that has been sufficient for today. It's enough for today. Leader Julius, anything probably you want to add, or maybe the leaders on the call? Is there anything you want to add, supplement? Ladies and gentlemen. Yes, leaders. Is Leader Julius there? Yes, Coach Piwa.
Coach Musa, I think this has been, to me, it has been a masterclass since the beginning of this last quarter. Thank you so much. I think to those that were listening attentively, they are able to take something out of this. And I see Royalq crypto ambassadors trading without even indicators on their trading view. So thank you so much, Coach Musa. I think we've got enough for today. Yeah, that's what I can say.
Yeah, thank you very much. Thank you. Thanks for appreciating. Yeah. Anyone? Anyone, please? You may want to say a word or two, any question before maybe in the next 5 minutes. Yeah, in the next 5 minutes before we can end. Anything? Someone may want to ask, inquire, supplement. Yeah, we are in a learning curve, so yeah, you may want to supplement or something like that, or inquire. Yeah, you can raise up your hand probably, and then you get unmuted, and then okay. So we yes, Sheila, please. Yes, Sheila. Sheila, you can unmute yourself, please. I'm seeing your hand is up.
Yes, thank you very much, Coach Musa. Good afternoon, almost afternoon. Yeah, thank you very much for this lesson. My question is, when is the follow-up so that we don't miss? When is the next one, which will be a build on to this lesson? When?
It will be a Friday. it will be Friday. This very one, this joint group, whatever Zoom will be on a Friday. Though I normally do with my team, with my class, I normally do Saturdays also from 10 to midday. Saturdays, yeah. But on this other one, on the build up on this, yes, next Friday, yeah. At least you will have time to in between just try to experiment drawing those trend line, the support, and just try draw. This is okay. Just draw, and see. Yeah, so that you can have a better question maybe in the next session when we have it. Say, okay, the other time I tried out, this was like this at least, but you would have practiced, you would have at least tried out and see yourself. Yeah. Okay. So it is Friday.
Thank you,
Sheila.
Yeah. Thank you very much. Thank you.
You're welcome. You're welcome. Yes, I think yeah, for those who may want to follow up again and probably take time off to watch again or listen or follow, I think the record is on the Crypto Ambassadors YouTube channel. You may find it there because it was being streamed live on YouTube. So you're most likely going to get it there. So that yeah, so that you can follow. You really can follow. Yeah. Okay. If there's no more question, Leader Julius is not feeling well. I hope he recovers quickly, so that he really rolls on into the weekly sessions normally. Yeah. Let's pray for him as well, so that he gets well soon. Yeah, he's one of the amazing leaders also we have here, and his services has been of paramount importance. So let's pray for him so that he recovers quickly. All right. All those who at least endeavored to attend today's session, I'm humbled and I'm happy you did. I believe you are as well glad to have attended, and let's try to practice because it is an environment we're already in, and we're not going to run away from it. Yeah, they say you can never run away from your shadows. If it is a business you want to prosper in, you will never take chances. Yeah, you will have to want to know everything. You know, everything. I mean, as we see posters, one or two things you may get new, which will be very helpful. Remember, whoever is here, I trust you have a downline. If you don't have a downline, you're looking forward to having one. And this, some of the things we're sharing here are some of the things they're gonna ask you. And if they ask you and you're unable to answer, do you know how people lose trust? Do you know how people, I have a guy who called me from, called me from somewhere, the person can't explain the business. I mean, the Royalq, not this thing. This is not this trading. The Royalq business, like how to set the parameters, how to deal with those parameters, the one shot and the cycle, the adjusting those margin call drops and so forth. They don't know how to manipulate, and whenever the guy calls, the person says, "I am busy. I am busy, very busy, very busy." Now, how can you download have trust on you? Let it not just be about the bonuses. Honestly, we have a lot to educate our people. Honestly, it's a gap already we have because we're just catching up. The countries probably which are already ahead, but we are on the journey. We are there. Yeah, we are going to be there and we shall be there. And the earlier we learn, the better for us. Now, don't only take Zooms as the only training session. Please do research. Sometimes go on Google, learn to try to go through this, right? Learn from different people. At least give yourself an open mind of learning at least something new. Yeah. So just that's what I'm going to leave you with, because whenever we're going to venture into the marketing industry, we need to have knowledge at our fingertips, and that is the only way you'll break through and enjoy. Because we are going to prospect, have these people brought. Yes, it's true. The bot works on autopilot. Absolutely, very okay. But for you who have been here, who has been in the trading business for some time, understand that yes, the bot does that, but there are people who are not patient with those daily repeated small profits. They want to look out for big thing. Now the big thing is where now we have to look for avenues of making it better, discovering ways of making sure that we satisfy the people we bring in the business, of making them understand. And of course, which is good, it's an advantage, because some people who joined earlier on didn't have this opportunity. For them, the robot works. That was the information they would expect. The robot works. But now we're having extra double benefit of learning and understanding the financial market better. You can now be in crypto, you can do in stock, you can invest in same concept. If it comes to technical analysis, honestly, it is same concept. Same concept. What we set as the margin call drop in Forex, it is a stop loss. Yeah. Take profit. Yeah. So it's same concept. Once you understand one, the other one becomes easier. And those are the areas. Crypto, stock, Forex are things we are not going to run away from, because in terms of Forex still leads in terms of market capitalization. Well, would you say, yeah, because it has been there for over 80 years. But crypto is not very far. The market capitalization is not very far. We are about there. In fact, by 2021, we were almost there, halfway, the market capitalization of Forex. Because I think it was around 3 trillion and Forex was around 6-something trillion, which was almost a half. And I know we are going to get there in the next bull cycle. I'm very sure. Yeah, very, very sure. Yeah. So let's just do that. Let's try to learn. Let's give ourselves time to learn, understand the financial market, and then we see where we shall be in probably the next 5 years. Yeah. Okay, it has been a pleasure having you guys on board, and for me to you guys, let's meet in the daily Zooms, and then on Friday. If all goes well and I'm not caught up somewhere, I'll be back on that next Friday, and we go through that. it's Juma, it's Friday, so I gotta go for prayers. Peace. See you later. See you in the next next Friday. Yeah.